Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Tuesday, August 12th, and it is a big day today because Circle, the stablecoin company that has been surging in the stock markets, just reported earnings for their first time as a public company, and we have got their CEO, Jeremy Allaire, coming on to the show momentarily. I am very excited for that conversation. We're going to follow that up with some more crypto analysis from our very own Yueqi Yang, who's going to walk us through what she's seeing in the land of crypto treasury stocks. We're then going to take a trip across the Pacific and bring on the CEO of a major Australian accounting software company, Xero, and we're going to end with yet another founder that is taking on NVIDIA. It is a small task, but a little seed funding can sometimes go a long way. Before we start, I want to highlight a breaking story that we published today about how China has demanded that companies halt NVIDIA chip orders over security concerns. You might recall that NVIDIA got the green light from the Trump administration to sell its H20 chips in China earlier this month, and President Trump also made a big splash yesterday with his announcement that NVIDIA will pay the U.S. government 15% of its China revenue on the new chips. But the Information's Asia Bureau reported this morning that regulators in China have ordered local tech companies like ByteDance, like Alibaba, and like Tencent to suspend their purchases of NVIDIA chips because of potential security concerns. This is clearly a play to get China companies to buy chips locally from companies like Huawei. And given that Donald Trump said yesterday that he might allow NVIDIA to sell modified versions of its very advanced Blackwell chip to China as well, this is a pretty big development, and we will keep you posted on how things evolve. Okay, let's get to our first guest. Circle reported earnings this morning for their first time since a monster IPO a few months ago. The company is the issuer of the popular USDC stablecoin. Revenue grew 53% year on year. USDC in circulation has basically doubled over the past 12 months. The stock was moving higher this morning, and it is already up nearly sixfold from its IPO price. And I want to bring on CEO Jeremy Allaire to talk about what's next for the business. Jeremy, welcome to TITV. It's great to have you.
Thank you. It's great to be on with you.
So, look, I was going to congratulate you on what I thought was your first earnings call as a public company CEO, but this is not your first time doing this.
No, I've had the pleasure of being an officer of a public company twice before Circle, but Circle's a special company, and this is a big thing that we're trying to do, and so and obviously we've been really, really excited about the market's sort of reaction to the company, and its kind of vindication of really the strategy that we've been trying to deliver on for over a decade now.
Well, look, it's been a big start for you guys and a big summer for you. I mean, I want to talk about the business broadly speaking. I mean, you guys reported 53% revenue growth this morning. The thing I want to ask you about the top line is, as it relates to revenue, what is the company's plan to diversify away from that interest income that currently dominates the top line?
Yeah, so a couple things. So when we think about the business and what we're trying to do, we're trying to build the largest regulated stablecoin network in the world. And when we think about where we are in that journey, we're very early. The internet financial system is nascent, and when people think about the growth of stablecoin supply, there are a lot of different views on this. Some range from a 90% CAGR over the next 5 years, some 25% CAGR. But wherever you fall in that, the amount of stablecoin money that's going to come into the ecosystem is significant, and obviously we want to continue to take market share. And but this is a platform and network utility business, which means it's fundamentally driven by the applications, the services, the developers that build on that platform and drive transactional activity on that platform. And so, as you've noted, to date, we've primarily monetized the money stock on the network, and we've built many different types of partnerships to drive and grow that distribution. And now, really starting in the last year, we started to build out many other products. So protocol products, blockchain infrastructure products, developer products, like our Circle Wallets product, and application layer products like Circle Payments Network or CPN. And so all of those are starting to grow, and we've seen 250% year over year growth in these other revenue. And our goal is to continue to build out more and more of these revenue streams, both subscription and service and transaction fee revenue streams. We have many places where we're doing that. And I think what we've kind of talked to Wall Street about is that we think that these can become quite significant over the coming years. And
how big do you, I mean, as it relates to software and subscription, I mean, how big a portion of revenue will that be a year from now?
Yeah, we don't really guide on any kind of future numbers like that as a public company, but I think at a high level we think about our adjusted EBITDA margins. We delivered 52% year over year growth in our adjusted EBITDA, and we have adjusted EBITDA margins of 50%. And I think it's our belief that we can continue to grow that adjusted EBITDA margin, and a big part of that I think can be the growth of these new revenue streams that have higher gross margin. And in fact, in the quarter, I think we shared that, over 200 basis points of our, what we call our RLDC margin, which is, a sort of margin of kind of revenue straight to Circle after distribution costs. It contributed to a couple hundred basis point uplift in that. And so as those grow, it blends out that margin structure, which also drives future profitability. But the more important thing here is that we're building a full stack from the infrastructure layer to the stablecoin layer to the payment network layer and the developer tools that are needed to build on all of that. And that full stack can work together, have multiple sources of monetization, and we believe is what's necessary to usher in the development of the internet financial system.
Let me jump in here. The revenue share agreement that you have with Coinbase is something that a lot of people have asked you about on the various podcasts and interviews that you've done. Do you see that revenue share coming down over time?
Yeah, well, a couple things. I think the first is that one of the things that we reported this quarter was that the amount of USDC that is sort of on platform on Circle, it actually grew nearly 10x year over year. And so it's about 10% of all USDC in circulation is sort of on Circle's platform. And what that reflects is that more and more companies are building partnerships with Circle and building on our infrastructure. And that's a big focus for us. And so when we build partnerships and people build on Circle wallets, or they build on Circle Mint, or they build on other infrastructure that we're delivering, we're able to consider that on platform. And that gives us the flexibility to also build, I think, novel economic relationships with folks. But that progression of more and more of the USDC ecosystem being built on Circle stacks obviously does support the kind of continued diversification of our kind of net revenue.
So the vision here is that it's built more on Circle stacks, and so that would mean that the revenue share with a platform like Coinbase would come down over time. Is that the idea?
Yeah. So if the majority of what's happening on our ecosystem is built on Circle stacks, that can reshape the kind of overall economics that goes to different distribution partners, including Coinbase. So really, the way I like to think about it is, we want to grow the total pie, and that total pie of stablecoin money that is issued by Circle, and we want more people in the pie. We want to share that pie with more people, and that's how we're going to get to trillions in circulation, and that's how we're going to get to billions of end users. I think it's been great with Coinbase. They've leaned in really hard. They've made USDC kind of central to all their products and services, and now a lot of other companies are catching up. And I think that the regulatory environment, other things are driving people to catch up. And now completely new categories of companies that are not in crypto, but traditional banks, payments firms, capital markets firms, internet companies are getting involved. And so that diversification is actually going to really accelerate, we think, in these years.
Let me jump in here. I mean, look, this has been a big summer for you. The stock is up. You had a great IPO. You had good earnings this morning. Jeremy Allaire is having a good summer. Okay, it's been fun for you. So what I want to know is, what is it that keeps you up at night right now?
Well, it's interesting. I made some comments about this on our earnings call, which is that post IPO and post the Genius Act becoming law, we've seen an incredible amount of inbound interest in working with us from major financial companies in every sector of finance, from major internet-based businesses to large corporations, and it's all around the world. And so one of our greatest challenges is really prioritizing and really, being able to scale into that opportunity space. And so I think that's a lot of what I think about is, are we building the right products for all these segments? Can we cover the needs of all these segments really, really well? Are we going to get spread too thin? Those are the kinds of things that I need to be thinking about. The team needs to be thinking about as this market unfolds.
We had some news earlier this month, or maybe it was last month, that Hong Kong is going to be accepting applicants now for its own stablecoin program. Does Circle plan to apply for one of those licenses?
We haven't announced anything specifically, but what I can say is we view Asia as a critical market. Asia is one of the very largest markets for us today. We're already available. The direct liquidity for USDC is available at an institutional level in Hong Kong today. We work with a global systemically important bank to provide that infrastructure. And so we have customers in Hong Kong, and cross-border trade is critical and has critical flows through Hong Kong. And in fact, with Circle Payments Network, CPN, Hong Kong was actually one of the very first corridors that we brought live on CPN. And so Hong Kong's important. We obviously we're very familiar with the stablecoin regime there, and are obviously kind of considering that in the context of all of our kind of broader product and growth ambitions.
I want to go back to this conversation you talked about, sort of building, Circle's own stack. You guys announced your own Layer 1 blockchain today. There are tons of Layer 1s out there. Why is it that we need another one, and why do you need to build your own?
Yeah, I mean, first of all, Circle is a market neutral company. We operate our stablecoin protocols on 24 different blockchain networks today. Our cross-chain transfer protocol provides seamless and safe cross-chain liquidity amongst those networks, and our developer tools support building applications and wallet applications on many of those networks as well. When we look at this problem space specifically, though, and really why are we building Arc and launching Arc? We've spent a huge amount of time with regulated financial institutions, mainstream corporations, and others. And we found that there are a number of challenges that exist with mainstream acceptance of stablecoin finance. And so that's the first thing, which is Arc is purpose-built as an open blockchain for stablecoin finance. It's aimed at applications in payments, FX, and capital markets. So this is not general purpose. It's a stablecoin-focused blockchain. And that actually shows up in some of the basic capabilities. So all of the gas fees and transaction fees for the network are paid in USDC. And actually, over time, as other people launch, stablecoins on Arc, we'll be able to allow those stablecoins to be used for the fee payment of the transactions. That's much simpler if you're a financial institution or a public company, and you need to account for and have predictable fees and have fees that are actually in a cash equivalent instrument. That's a much more straightforward thing to adopt and implement as a mainstream business. So that's one, is sort of low cost, predictable fees in stablecoin. Another big area is really around the assurance that regulated financial institutions need around availability and settlement finality. This is getting slightly esoteric, but broadly around the world, bank regulators really want to hold their banks to a certain level of finality of transactions. You need to know that when a transaction is final, and that's really key. What we've been able to do through a novel consensus mechanism and through a permission validator set is provide deterministic settlement finality nearly instantly. And that's a big breakthrough, and it's going to be really important if you're a major financial firm and you're trying to build on this infrastructure. Privacy features are also important as well for mainstream finance.
Let me jump in here because I know you've got to run. Just last question for you. You talked about those major financial firms. We've heard of other banks talking about issuing their own stable coins. What do you make of that competition?
Well, first of all, we view banks as tremendous potential partners for what we do. We already work with many banks, and the number of banks, both regional banks, global systemically important banks, networks of community banks, and others that are engaging with us right now is at an all-time high. We're seeing so much interest in banks that want to use this as a payment system innovation. And in fact, we announced in the quarter partnerships with Fiserv, FIS, Matera. These are core banking infrastructure providers to tens of thousands of banks. And so we're getting our infrastructure in there. And we think that banks, whether you're the smallest bank in a community or a very large GSIB, can benefit from this technology. And we're eager to partner, and we are partnering with these firms.
Great. Well, Jeremy, it's great to have you here. Congrats on your first earnings call as Circle CEO, and like you said, you've been at this a couple times before, but this is a very exciting ride you're on. So, thank you for being with us here. That is Jeremy Allaire, the CEO of Circle. Well, I want to keep the crypto conversation going and bring on someone who has been following Circle's journey for quite a long time. Yueqi Yang is our crypto reporter here at The Information. She not only writes about stable coins, but she also writes about crypto treasury stocks, venture funding, IPOs, and also the many crypto pursuits of Donald Trump and company. I want to bring her on to talk about what she's focused on these days. Yueqi, welcome to the show.
Hey, Akash. Thanks for having me.
So very quickly, we just had Jeremy on. What did you make of the interview?
I thought you asked a great question about.
Well, not me. I mean, what he said. What he said.
Well, in response to your great question about Circle's revenue share with their distribution partners, the answer that he gave was that he didn't really commit to whether Circle will share more or less revenue, but he kind of alluded to this theme, which is that if more activities are happening on Circle's on stacks, and that would reshape their economics. And I thought that's an interesting way for him to address the question. And we do know
sounded like he was hinting at something there.
And I wonder how is Circle going to go about achieving that exactly. And I also thought the announcement that they're planning to launch a layer one blockchain was a surprise. So I'm wondering how much adoption that you will be able to see from their own blockchain.
Right. I want to change the topic slightly. You had this story last week about crypto treasury stocks. Tell us about this story that you wrote.
Sure. So I've been covering crypto for a few years now, and every year there's always going to be this new shiny thing that takes a lot of attention and a lot of capital. And you know that in 2017, it was the ICO boom. In 2021, 2022, there was the NFT boom. And then when I talk to investors these days, it quickly became clear that the crypto treasury stock is the thing that's a symbol of the current cycle.
Right.
And one investor said it's sucking all the oxygen from the room, and that's the only thing that people want to talk about. So I looked deeper into these stocks. Mako Saylor's strategy is one of them, but there are over 100 of them being launched right now.
And that's the Bitcoin one. There seem to be these stocks for Ether, for Solana, for everything, really.
Yes, and what I've found so far is that we're starting to see early signs of a cooling down for some of these stocks. Their valuations have come down, and in some cases, the valuation of the stock is lower than the underlying value of the crypto that they hold. And anecdotally, I've heard investors talking about some of the launches actually failed to materialize. And for the ones that do go out of the gate, they're raising at a smaller size than they initially targeted.
Right. I want to jump in. So you talked about these valuations cooling down. I mean, why did these catch on in the first place? Explain that to us. Why was the crypto community so gung-ho about it?
And it's not just the crypto community, it's also the stock market investors. I think the pitch that they have is that for all these stocks, they provide investors an easy way to get crypto exposure because they can just buy the stock, which will then in turn hold crypto assets for you. And you can gain exposure to crypto assets. And that appeals to investors who either do not want to touch crypto directly or cannot because they're institutional players. And these stocks really took off. And the data showed that in the US alone, they're raising more than $90 billion so far this year. to buy crypto. And to put that into perspective, all the U.S. IPOs so far this year only raised more than $30 billion. It is attracting a lot of capital and attention. And I think the next question that people are trying to ask is that how is this going to pan out? And since we're seeing these early signs of slowing down, the natural question is that we're asking is, has the music stopped yet? Is the music stopping? And what's going to happen next?
Let's pivot to talking about the IPO market. Which crypto firms are you watching with respect to companies that are likely to go public in the next year or two?
So Bullish, which is a crypto exchange backed by Peter Thiel, is set to go public this week. And this is the next big crypto IPO we're watching after Circle's IPO. And so far, yesterday, they said that they're targeting to raise close to $1 billion, which is upsized from their initial goal, which I think reflects some of the investor enthusiasm in the stock. Other crypto exchanges such as Gemini and Kraken are also making plans to go public. And crypto asset manager Grayscale, which is part of the DCG conglomerate, has also said that they've filed confidentially to go public.
Well, look, it's a pretty exciting time for your beat. I expect that we're going to be having you on a lot more as news breaks, not just about these IPOs, but also about these big stock market swings and crypto market swings. So thank you, Yueqi, for coming on. That is Yueqi Yang, our crypto reporter at The Information. Now, before we get to our next guest, there is one headline that I want to get through very quickly. StubHub is giving their IPO another go. The company halted its IPO prep in the spring, but now plans to go public in the fall. They filed their first quarter financial information on Monday and revealed that revenue growth slowed to 10% and free cash flow margin halved from 14% to 7%. That is one that we've been tracking in our IPO tracker on the Information's website. You can check that out. I'll link it in the show notes. Okay. Speaking of StubHub, our next guest was at one point, a couple years ago, the president of that company. That was one stop on her long, winding, and impressive career through the technology sector. Sukhinder Singh Cassidy has co-founded companies, she has CEO'd companies, she has invested in companies, and her latest gig has been leading Australian accounting software company Xero, which she quarterbacked through quite the turnaround since 2022. I want to bring on Sukhinder to talk all about that. Sukhinder, welcome to TITV.
Hey, Akash, how are you? Nice to see you.
Nice to see you. So I got to ask, I mean, are you in Australia right now? Where are you?
Well, I'm actually based in the Valley, so
Okay.
so is a lot of our leadership team because although the company trades on the ASX, it's global. Almost 50% of our revenues are outside of Australia and markets like the US, Canada, the UK, South Africa, Singapore, and more. So, no, I'm based here, but I go quite often.
Nice. Well, that's a long flight. So hopefully you don't have to make it that often, but I suspect that is part of the job. Look, I want to talk about the company's growth strategy and all the work that you're doing in the US as well. But I want to rewind the clock just a little bit because, you came into this job. Xero was a very different company then. The company was not doing so much in the way of free cash flow at that point. The stock, if you look at it, I mean, all the enterprise software stocks were kind of trending downward. But if you look at the stock chart, it comes right back up right after you started joining the company. And today we're looking at a company that is Rule of 40. It's generating free cash flow. So the first question I want to ask is when you took the position as CEO, what were some of the core problems that you identified that you wanted to solve?
Well, first of all, let's just talk about the opportunity. I mean, the opportunity is that small businesses around the world are still digitizing their back office. That's accounting, tax, e-invoicing, bill pay. And so as you look at the macro, I was first attracted to the opportunity, which is a global software player, SaaS player, high margin, high growth. So it was growing north of 20%, diversified footprint, loves software, loved brand because it's so easy to use. And the opportunity I think you're talking about is, was not yet profitable. So of course we did restructure to become profitable. It was, I'd say a bit over its skis, like many tech companies of that era, 2021, it hired aggressively, maybe a little too aggressively, was not yet profitable, was not yet Rule of 40. And I would say the real opportunity for us is to get focused. So we focused on top line growth, profitability, narrowed our footprint of geos we're focusing on. We call them the 3x3 markets and the 3x3 jobs. So that's really Australia, the UK, and the US. And the jobs are accounting, payroll, payments. I mean, if we can build a really seamless and beautiful and magical experience experience across those three super jobs, we think we win for SBs. And so that's been the focus of the last 2 years. It's just like that drumbeat. Top line growth, profitability, focus, and innovating, but in a very focused way. And now, of course, including AI.
Right, right. And I mean, let's go to AI. I mean, one of the things that I noticed about your website, interestingly, is that while I'm sure AI can have many applications in the world of accounting software and financial tools, actually, if you go to your website, unlike some of the other enterprise software websites, AI is not the first thing that you see on the website. In fact, I actually couldn't really find it anywhere on the website, and I don't know if that was a choice or if the website is under development. But I mean, I thought this was going to be the loudest thing for you guys.
Well, it's interesting. So first of all, we listen to our customers and like their daily need is to get their work done. So you can go out with an AI first message. I think what you want to do is start with a customer first message. So, and by the way, you're on our landing pages logged out. So logged in, if you were logged in, you would have what's called Jax. Jax is just Ask Xero. It's our AI chatbot. And it already lets you today do things like raise invoices. By the way, you can write to Jax and create an invoice. Invoicing is one of the big use cases on our platform besides accounting. You can do that from email. You can do that from WhatsApp. You can do that from the website. You can ask Jax a question about how to set up. So we are indeed off and running as everyone else is. Keep in mind, a lot of what you also don't see is the traditional machine learning and AI we've always had, bill ingestion, managing the reconciliation task, right? Like what categories, auto-categorizing, things like that. So no, we are deep on the AI train, but I think what you see from the website is, look, let's message first to customers about their needs. And as we're in, again, the job of AI in our world is not to just talk about an investor call. It's really to deliver increased functionality and save users time. And we take perhaps a much more kind of focused approach on the user versus worrying about trumpeting it on our homepage.
You mentioned you're based in the Valley. Talk about your U.S. strategy and also talk about the acquisition that you guys just made in Melio.
Well, sure. So first of all, as you noted, we are in the U.S. And interestingly, we are underweight the U.S., meaning we're growing well, but it's not our biggest market, as you pointed out earlier. And so for us, the opportunity is Xero's long been regarded here in the U.S. as, I'd say, very easy to use and loved, particularly by the channel as well as small businesses. So the channel, I mean accountants and bookkeepers who advise SMBs. And I would say for those SMBs who are looking for choice, we are a more open stack, let's say, than some of our competitors. Meaning if you want to integrate us with Gusto or Bill or Brex or Ramp, any number of companies in the ecosystem or ADP, you can do that pretty easily. So we're a pretty open ecosystem. Now, what are we doing in the US? Well, look, we're doubling down on the market. It's growing fast for us. We do believe in those core super jobs. They need to be seamlessly integrated. And that led to the acquisition of Melio, which we announced in June for about $2.5 billion. If you're familiar with Melio, you know they are a really elegant and easy to use solution for bill pay for SMBs. So they fit very nicely within Xero. I said we have a lot of invoicing, so we have a lot of money in jobs, but we wanted to own the money out job as well, right? And make sure that that is bundled in with Xero. The last important thing about Melio, and I think this speaks to the US ecosystem, look, there's a lot of fintech convergence. So interestingly, we bought a platform that itself is open, meaning it embeds bill pay in sites like Shopify, in sites like Fiserv. And again, unlike our competitors, I would say in the US, we believe in an ecosystem where you should do your work where you want to do your work. So if you do it on Xero, great. We're building our first party business. But Melio really gives us a third party footprint of distribution into other fintechs. Again, and we see that as a big positive in the US market.
I want to zoom out a bit. We talked a little bit about this sort of turnaround that you've led the company through. You've spent so many different stops at various different companies along the way. I'm always eager to hear, where executives sort of learned their chops and, if you'd orchestrated a kind of a turnaround before, where did you sort of come up with this sort of strategy, the 3x3, and, how you were going to sort of, year by year, help the company get to a rule of 40?
Well, first of all, I hesitate to call it a turnaround. It was high growth. I would say it was a refocusing. If you
Stock prices turnaround.
Yeah, thank you. Look, I would say I started my career in the Valley. Besides being at sort of Amazon early on, I was a founder at Yodlee. Keep in mind, Xero uses Yodlee. So I did start my career in fintech as a founder and built those very first data aggregation shops. Then I spent almost 6 years at Google. And at Google, I ran our non-US business. So I ran a portfolio of markets that went from Australia to China to Brazil. So probably not a surprise that I'm running a globally diversified software company today. Where I learned that. And then I spent 10 years in e-commerce as a founder again. And then at StubHub, to your point, I was the CEO prior to the current ownership change. I was there running the company, and we sold it out of eBay into its current ownership. So I guess I've had a lot of experience as a founder. I do know how to manage cash, and cash is king. I've had a lot of experience in e-commerce and fintech. And then at Google, the kind of, I'd say, global experience. And so in some ways, Xero feels like coming home. It's e-commerce, it's fintech, it's global. And quite frankly, being a founder, including managing StubHub through COVID, where I had to manage a very large company through cash crisis and make sure it survived, maybe I have a healthy respect for profitability.
Well, very quickly, I mean, I know it's been years since you left StubHub, but we just talked about how the company is sort of reinvigorating its plans to go public. What do you make of this moment for the business for them?
Well, look, I think I'm no longer in the business, as you know, but I think what they pointed to in first year results is very true. StubHub, like many ticketing businesses, is a business that rides and falls on big events. So I think they pointed to the event landscape in and it is in fact true that, when you have a big Super Bowl matchup, your Q1 results will be really good. When Taylor Swift goes on tour, you will have a phenomenally good year. So it does in many ways reflect the live events ecosystem. And I think that's consistent with what they've said externally. Though again, I'm no longer company, so you'll have to ask its current owners. But from what I surmise, it's very much about the landscape. And I think the landscape does disproportionately affect the results of the group.
Great. Well, Sukhinder, it was great to have you on the show. Like I said, it's a fascinating business and, also a very exciting time for the business in the US. And so I look forward to having you on as you guys have more announcements and more news. That is Sukhinder Singh Cassidy, the CEO of Xero. Okay, for our final guest, every year at The Information, we put together a list of the 50 most promising startups, I should say, that our sources can't stop telling us about. Last year, one of those companies was Mako, a startup that is tackling NVIDIA's software problem. The company just raised a seed round today. It was $8.5 million from M13. Joining me now is CEO Waleed Atallah. Waleed, welcome to the show.
Happy to be here.
So tell us about what you guys do.
All right. So at Mako, we are on a mission to automatically generate GPU code. So this is something that's usually done by a small pool of experts. It's incredibly difficult to do, and we're working with the best to make it automatic.
So, okay, automating GPU code. We got to take like 15 steps back. So what is GPU code? Why is it a problem? How did you decide on this idea?
Yeah, so any software, whether it's ChatGPT, Gemini, whatever else it is, anything that you want to run on GPU code actually needs something called a GPU kernel to map that software to the GPU. NVIDIA has a extensive library of this, the CUDA library. You've probably heard of CUDA. And this lets people basically run their software on the NVIDIA GPUs. The problem, though, is that developing CUDA libraries and developing the support for these types of models or any type of AI model or any software that runs on a GPU is incredibly difficult. The GPU kernel engineers, they get paid over $1 million a year. Most of them work at NVIDIA. The rest work at Facebook, Google, Amazon, you name it. And basically, the core of it is that the rest of us basically have to build with the Lego blocks that we already have. But by automating GPU code generation, we can create new Lego blocks. And it really opens the door for new AI research, new algorithms, and new hardware.
So you guys are actually, fundamentally, you are basically an AI code generator, but you're a specific type of AI code generator, the code that is to help run these GPU.
That's correct, yeah. So it's a tricky one because it's not just writing like software algorithms. You have to generate code that literally maps to specific hardware resources. Not just trying to make an algorithm that works. You have to do both sides of it. You have to do the software and the hardware pieces.
And this seems like, going back to you were talking about CUDA, this seems like something that NVIDIA could do very easily, no?
Oh, they have 1,000 engineers that are working nonstop on this. And it's definitely something that's a strong point for them. They've been developing the CUDA libraries for the last 20 years. The problem is, though, like even, for example, when H100 was out, We were talking to a large public cloud that had developed a ton of these GPU kernels internally for H100. The second B200 comes out, they now have to spend 6 to 8 months rewriting all this code. And this is something that, you know, even NVIDIA has to deal with. Every time a new hardware generation comes out for NVIDIA, they have to spend all this time rewriting the code. So we want to compress months of engineering effort down into hours. And that's what our agent does.
So talk to me about where you guys are at in your product lifecycle. Do you have a product that you're selling to companies yet? Do you have any revenue?
That's right, we do. And so we're actually very excited to partner with AMD, and we're partnering with Tenstorrent as well. And we are using our AI agent to develop code for all sorts of different hardware. Today, we support NVIDIA, AMD, Tenstorrent upcoming very soon. And you can try it right now on our website. There's the free version available. And to get access to the pro version, just click the button.
And so you actually do have customers and you do have revenue.
Yes, that's correct.
And talk to me, I mean, like, do you see yourself as a challenger to NVIDIA? Because I sort of see this as, you know, a way to make it go faster, but then ultimately, if they're using your software instead of...
It's not a challenger move to NVIDIA at all. This is actually extremely beneficial for the entire NVIDIA ecosystem and for everybody who wants to use NVIDIA GPUs. We can improve the performance of existing kernels. We can also enable new software to run on NVIDIA GPUs too. And we can also enable software to run on all sorts of different GPUs as well. So it's definitely not a challenge. I think this is actually going to be like a rising tides things where this helps the entire ecosystem. Right. In particular, I think this is going to be really useful for the AI researchers and everybody who's putting new algorithms and new hardware out into the world.
Last question for you before I let you go. You know, there's so much discourse around chips and, you know, where chips are going and, you know, in your case, the software around the chips. What do you think people miss about the discussion around AI chips right now?
Yeah, so I mean, it probably depends on like which level we're talking about, but in general, you know, we've seen a dozen really amazing architectures come out. We have obviously the standard NVIDIA, right? And with HBM and a lot of new innovations that they're making to optimize for AI processing. But we've also seen a lot of other really cool chips, Cerebras, Grok, Tenstorrent, a whole host of them trying novel architectures. The problem, though, is that without a proper software stack and without somebody to write all of that low-level code that maps the algorithms to the hardware, your chips are basically expensive paperweights. There's a lot of effort going into from all of these companies. They're investing in compilers, they're investing in developer tools, they're investing in programming languages, and also people are going to start to invest in LLM-generated code like ourselves, and I'm sure there's a bunch of other efforts happening internally at these companies too.
Great. Well, Waleed, thank you for coming on the show. Congrats on the seed round, and you know, like we've actually been following the company for a while. Again, you were one of the 50 most promising startups on our list, and so that is a list that we track pretty regularly. And so I'm excited to see how things evolve for you. Thank you for coming on the show. That is Waleed Atallah from Mako. Well, that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show. And so until tomorrow, bye-bye for now.